Welcome to the Swing Trading with Cycles channel. We're going to do an update on crypto today. It is February 20th, 2023. It's President's Day. As usual, we're going to focus on Bitcoin and Ether. But in this video, we're also going to look at some other crypto assets, including Solana, MATIC, Blur, Lido. We'll also look at Optimism. These are all definitely much more risky than Bitcoin or ETH. But again, we're using price action here. And so welcome if you're new to the channel. Definitely take a look at the pinned comment to understand cycles, but more importantly, price action, swing lows, swing highs. We have our swing low, that's the potential bottom, the potential long-term bottom for Bitcoin right down here. Right, that happened in November after the FTX meltdown. That was your FTX meltdown a few days. We languished here for, this was like a 60-day consolidation. And then this is the breakout. This is the continuing breakout of this massive consolidation. And so the question is, do we have the final bottom, the end of this massive downtrend from this swing high, right? This swing high on the daily, all the way down to this swing low. Is that our final leg down? Right now, what we have is a series of higher highs and higher lows. This is a Bitcoin chart on the daily. That is an uptrend. You have this kind of crazy parabolic move that, of course, is like, well, this can't be sustained. And of course it can't. And this blue line is a 10-period moving average. And then we have this consolidation for like 4 days. And then another rally. And then a bigger consolidation. And this swing low here is like the reset button, right? So let's think about, and the reason why cycles are so helpful is that it just gives you a sense, it just gives you a sense of how far, like how long it's reasonable to expect a rally to last, right? So you think about this massive consolidation, it all ended with this swing low here. It always, every downtrend ends with a swing low. Every uptrend ends with a swing high. Another way of saying that is every uptrend is started by a swing low, right? Every downtrend is started by a swing high. So this candle here, you can see that marks the low. That started this uptrend that we're in, again, this parabolic move and then a consolidation. This consolidation is your higher low. This is another higher low. So when we dropped into this low, so we consolidated here, and then we had this pretty sharp move down here. Then we consolidated here for a few days. This here is a good potential long trigger. This candle right here, right? You make a high above here, that makes this a swing low, right? And then now this is day, 1, 2, 3, 4, 5, 6, 7. So you can see there's swing lows within swing lows within swing lows, but we're talking about the primary here, and that's where the multiple time frame analysis comes in. We'll look at the weekly chart and that'll become more clear. But right now, we need to stay above this lower high here, or excuse me, this higher low, excuse me. And that creates a very, very simple risk point. And that number actually interesting, 21,420. That actually has another meaning. That gives us a monthly swing low as well. So that's the multiple time frame analysis, and we'll talk about that. And you can see the next point down would be around that level. And so there are very clear risk levels here. Now that we're creating a higher low here, you actually kind of want to hold there as well. And that's the last thing I want to talk about on the daily chart, is that this candle here was a real harbinger. And technically we are still below this high, so there's still potential that this becomes the swing high that ends this rally here, right? This happened on February 16th, and it's like, oh wow, this is a textbook bearish looking candle, except an important detail. It doesn't make a lower low, and by that I mean it doesn't go below the low of the previous candle, not even close, right? This candle right here has a low at 22,064, and this candle has a low at 23,520. So a pretty good distance between that. And then obviously the next day, you couldn't know this was going to happen beforehand. You get this move up. So the point there is that sometimes what looks like a really bearish candle actually just ends up being consolidation, for all intents and purposes. And again, so you want to be careful getting too bearish before there's a lower low, or too bullish before there's a higher high. Another way of thinking about that. Because this candle, while it looks incredibly bearish, is only actually bearish if we get a lower low. So once this candle printed, the low was 23,520. What you're looking for is a move below 23,520. And of course, we did get that. This candle went to 23,369. So it poked below 520. So we went below 23,520. So this is actually a false breakdown. Again, now this hasn't actually made the higher high. What you expect from this pattern, if this candle makes a lower low below this candle, that's going to make a higher high. So we're going to, now it's been 3 days since this big move and we're consolidating, right? Like notice that we are essentially inside the range of this green candle that is trying to reverse this bearish reversal. That's the way to think about it. And you can see it poked its head up twice and did it again today and hasn't gotten anywhere. But it's also not breaking down. So the longer we stay up here in that zone, the more likely it is it's going to break through. So if we think about time from this swing low to this potential swing high is about 47 days. Now, from a cycles perspective, we could actually think about that as, so that's a rally that lasts 34 days, and we get our important swing low on day 45. So rally lasts 34 days, low comes in on day 45. That could be a daily cycle, and this is a new one. We're going to have to wait for more evidence. The point is you have really clear levels of where you could have been long. You know, this is a clear higher low above this. And obviously, we'll see how this consolidation breaks that sort of resolves. But at this point, it's very clear we need to stay above 379, right? The low of this green candle. That's not too far below here right now. And I mean, obviously, the risk reward there, you think about the points to the upside, because this thing clearly is going to try to make a beeline to like up here, right? At some point. And what I mean by that is, even in a bearish move, we could still expect to even get back up to here. That wouldn't even be crazy. And obviously that'd be a lot of upside from here, a great swing trade. So if this is a new cycle that's kind of starting anew, this would be day, what is that? 7, I think it is. Yeah, that's right. And so we'll watch for that. I think the point is we clearly have a series of higher highs and higher lows. Now let's look at the weekly chart to see how that, because that's the dominant time frame. That's what we want to, so we can see for on the weekly chart, we have, this is our swing low on the weekly. So we've been rallying for, that's 3, 4, 5, 6, 7, 8, 9, 10, 11. So this is technically week 12. And you can see we just opened this weekly candle last night. And this is still technically an inside candle. It's because we haven't made a higher high above that swing high on the daily. And so if and when this does, right, what you like, this is what you expect, right? Like, just, you can kind of, you can see the move potentially happening before it happens. And that's not to say that you're making a prediction. It's just being ready, right? You can see that, right? Like, this thing wants to test this area here, right? Like, at least. And then, as we said, you know, you could see a world where we're also trying to get up in there. And so you can see a world where anything between these levels is fair game, right? So between 32,000, call it 33,000 and 48,000 easily. Doesn't mean we get anywhere near 48, but maybe we do. That's why, again, it's all about watching how far can this trend go. And in terms of cycles, thinking about the weekly levels, let's just see. I mean, you can see in a bullish trend, you can easily have a move that goes for, what is that, 31 weeks, right? This move here is, because it just gives you a sense of like, can this, I mean, how far can this really run? That's like 23 weeks, right? Back here, like, how long is this move? It just gives you a sense of like, is this out of the ordinary? That's 31 weeks. So you're starting to get a bit of a pattern, and it becomes a little bit, you can say, well, is call it any cross, any close below the 10-period moving average, the 10-week moving average in this case, because you can kind of say this is one like really big, clean uptrend. I mean, let's just, if we wanted to be generous and call this whole thing a big uptrend, like that would be the most bullish interpretation. Wow, that's 67 weeks. And I think most importantly, again, that's where the multiple time frame analysis comes in. You want to think about this on monthly time scales. That's why I'm doing these updates more or less on a monthly basis. Look at this candle on Bitcoin. What is it doing? It's making a higher high on the monthly chart. It's higher than this, which this is also making a higher high above this candle here. We're also taking out all these highs here. These are all swing highs on lower time frames. This is what a bullish reversal would look like. And so that leans the odds towards this being a bullish reversal, right? I mean, it's quite simple. I mean, look at this move, right? We make higher highs on the monthly chart, and then we're off. And obviously, this was COVID, but this is what you want to see. And the idea is that we're actually only in month 3 of a new long-term cycle. This last one was 35 months, I believe it was. This was like 35 months. Doesn't mean we're going to get another like move like this, or even, so this was obviously a much choppier move. I mean, look how clean this is. And I mean, and this move is this move is just enormous in terms of percentages. I mean, this is a double up month, I believe it is. Or no, excuse me. This is a 5x month. Goes from 200 to 1100. Wow. And so you could at least expect we're going to get maybe 10 months. And if we're in month 3, I mean, that's a big deal. We're in very early in a long-term cycle that even if it's bearish could give you 10 months of rally. That is awesome. And let's look at ETH, which has generally outperformed Bitcoin. And I'll say in general is more actually kind of useful within Web3, if you will. So ETH is showing a very similar situation, except for Bitcoin, remember, it kind of crawled along the bottom after that FTX collapse. So this is Bitcoin's FTX collapse. And remember, ETH, and this is a daily chart. Remember, ETH did not make a lower low. It actually made its low back in June. Around 880 was the bottom tick. And it came up here, and this was a higher low. I mean, not beautiful. It kind of gave back a lot of this rally, but still a higher low nonetheless. And you can see this period that was just kind of crawling along the bottom for Bitcoin, we actually had a pretty sizable rally within it. Obviously, big rejection. You can see, I mean, this rally from here to here, I mean, what is that in percentage terms? Let's just put that into context. Right, so that's a nice, like 25% rally. And that's the daily chart. That's not even that many days. And then you have like this really clean move up here that we just had, again, analogous to the Bitcoin one. Then we have the consolidation, same as Bitcoin. And again, same idea, important swing low. And now we've made this move up and we're consolidating. Again, same pattern. This candle looks incredibly bearish, but it is only actually bearish if and when you make a lower low. And remember, you can make that lower low and have it reverse on you. That's called a false breakdown. That's actually very bullish. Same thing goes in the other direction. False breakout. If you have a higher high, like this was the makings of a false breakout, right? It popped up and then just got completely rejected, and the expectation would have been the next candle would have given you follow through. It hasn't. That makes your very, very clear line in the sand the low of this candle, which is 1634. It's not rocket science. It's a really simple risk procedure. We're up here at 1700, so that's like $670 of downside risk for clearly this thing is trying to make a move to 2000. So that's 300 to 6, so a 5-to-1 essentially. But obviously the real prize is this thing is going to go back to all-time highs eventually and even surpass that easily, maybe 10,000. But you can see just on the chart, very clear to your eye, it wants to get to 2000. And if it can break through that, if and when there's going to be like that same thing with Bitcoin, for ETH, that gap is like between 2000 and like 3600 basically. I mean, you can see it's like a shelf, right? So going to be really interesting when price gets in here, how quickly it kind of makes a move here. And I imagine there are going to be violent counter trend reversals on the way up in that uptrend. So people are going to have to be careful to sort of hold their position. And again, know your risk points. Know where know where the lower lows are. And that's when you really get bearish. So that's your daily chart for ETH. And here's the weekly, same kind of idea as Bitcoin, right? I mean, really, this little weekly rally is just getting started if you look in the context of these. And these were in bullish trends, obviously. I mean, look at that, right? So same kind of idea. Let's see, for ETH, we're probably talking about similar rally in terms of like time. So this rally here, that was the long one. Wow, that's 59 weeks. Ooh, I mean, look at this thing. That's shorter, but really steep. I mean, that's huge price appreciation. Obviously, that's in the very early days, and so we're relatively early in something, right? So all that to say, and if we look at the monthly chart again, that's where we want to focus. Are we making higher highs on the monthly chart now? Yes, we are. The last month's high was 1680. So staying above 1680 is actually really important, and you can see price has dipped down to that level and it's been bought up, which is very constructive. But you can see this, just we need to get through, like, so we're above these highs here, which is great. Need to stay above those, but then need to get above this kind of area here. And again, that's that around that 2000 level that's clearly visible on the daily and weekly chart. And you can see it could be a rapid move back to all-time highs once through those levels, which I suspect will be really hard to get through, to be fair. But if you watch the price action, you know exactly what to look for. So now let's look at some of the smaller tokens. And again, remember, market cap matters. The market cap of ETH is like, I think 300 billion now, something like that. And so these guys are much smaller. I think MATIC here is around 10 billion. And you can see it's the same idea. This thing has been rallying. So you could say we put in a little low here and that this is a new daily cycle. I like that interpretation. I mean, we'll see if that plays out. But you can see in terms of daily rallies, like this is a good example of one where this thing rallied for basically 70 days. Now, there were some very violent counter trend moves in here. You can see these red candles, like very violent. Well, this is very violent. That's actually kind of shallow. And this is kind of a little bit of a chop zone here. But that's a nice move here. And so just putting that in context, if we're starting another daily sort of period like this, that could give us, we could have a lot of upside in terms of time, which would presumably translate to price. And if we think about the weekly chart on this guy, you can see this uptrend started here. So that's 1, 2, 3, 4, 5, 6. This is only week 8, and it's an inside week right now. Again, the weekly candle for crypto starts on Sunday nights. That's important to know. And so this thing needs to break. And you can see, importantly, it's broken above this kind of massive rejection here. So that's really important. And that tells you you're gonna want to stay above that level down at 129, like basically $1.30. And clearly this thing wants to try to test this kind of 180 level is the next obvious pivot, and all-time high is about $3. So it would be a double up from here for an all-time high. So that's MATIC. And I'd say, just in terms of fundamentals, this thing is actually the crypto network that tends to be used by corporations that are trying to get into Web3. And you can see on the monthly, things are even clearer. You have this massive, ugly chop zone down here. And then really most of the move happens in 5 months. You can see that. Month 1, 2, 3, 4, 5. You get huge upside. And what do we have here? Another period of consolidation. So this is setting up an interesting situation where you can see we had this period where price really didn't do much. It didn't really go anywhere. And then we had a violent breakout, just a violent breakout for 5 months. And what are we getting right now? Does that seem familiar? Right? You see what I mean? It's so that could be really interesting. And again, it's not a prediction, it's a scenario. And if we see that it starts to play out similar to that, well, then we have an interesting we have an interesting we have an interesting move on our hands, an interesting opportunity, really, right? Like, imagine the symmetry here. I'll take auto off and just kind of squeeze this down. But I mean, look at the symmetry there. Like, imagine a move up here analogous to this. Very nice. And I believe this is like a $10 billion. Oh, right. They don't have market cap on TradingView for this. I believe it's about a $10 billion network. So getting back to all-time highs would get it to like 20 billion. But you could easily see this thing justifying 100 billion at some point in the future. I'm not saying like next week, but you could see it. Solana is another big one. And just to be clear on the monthly chart, I mean, look at this. We talk about making higher highs on the monthly chart. This is a nice big monthly high. Last month's high is at $1.20. So that's really the important level you're going to want to stay above to continue to make higher highs on the monthly chart. I mean, look at these massive higher highs. Obviously, that's what we're looking for, a nice move. And so if we look at Solana, that's another big one. Bottomed at $8.68. What is that? $7.96. A tick below $8. I mean, look at this thing. It's pretty clear, and it doesn't mean it has to keep going up. It could stop going up, and that's why you use stops. But I mean, you can, like, this is your long-term trend. Up, then you have this pullback. Up, you have this pretty shallow pullback, little consolidation. Up, and then things really go off the rails. You have a lower high, lower low, lower high, lower low. So right now, we could be setting up for something like that, right? That's the bear case. And there's no reason why it couldn't play out that way. And one has to be ready for that. But it's also possible that this move here, like, think about this. We just kind of charted this like looking at kind of all the nooks and crannies. But what if you kind of think about it in the context of that being a big move up, that being your big move down, and this is your next move up? Just kind of simplify. And there are going to be wiggles in between this, but just big picture, that's your sort of counter scenario to this leading to a lower low. So right now, you need to get above 2678 to have another higher high on the monthly chart, because January closed as a January closed as a higher high, a big higher high. You made your low in December after the FTX collapsed. It continued to fall in December. And again, that low was at 796. That candle had a high at 1497, so just about $15. And so once you crossed above that, you had your monthly swing low in place, your potential long-term bottom, and now we're getting follow through. That's what's happening. We're getting follow through now. That is really bullish. Again, needs to get above 2678. But certainly there are plenty of signs on the lower time frames. And I tweeted about this when it was around $16, I believe it was. I myself have been getting in at different levels. I think my average cost is like in the low 20s. And so this is your daily move, your consolidation. You notice most crypto is doing about the same thing. It has this furious move up, a consolidation, move down like this, and now it continues to, and like this is your potential daily cycle low and your move up. And whether it's actually a new daily cycle or just a local uptrend doesn't really matter. The point is, it's a local uptrend if it's not a daily cycle, and so you can play that to the upside. Obviously, that's Solana, and this thing I think has dropped to like a $10 billion market cap, something like this. Lido is a liquid staking token, and we'll just kind of look at the monthly chart on this one, and you can see it hasn't been around for that long. There isn't a ton of data here. Goes back to May 2022. You can see it just drifted lower for 5 months, and then boom, reversal in January. There's a lot of fundamental reasons for this. People, like, centralized solutions for staking don't seem as reliable anymore. And we've made a higher high on the monthly chart. And again, this is one of those cases where there's not a lot of data, and you could be like, oh, well, you can't really analyze this. But you absolutely can. If anything, this move never made a lower low below this big candle here. That's how it works on all the time frames, and regardless of how many candles there are. You don't need hundreds of candles to find a trend, not even close. Blur is a very new token, so there's only one. So that's your monthly candle looks like that. Even the daily candle doesn't really tell you much. So we actually have to kind of shrink down to the 15-minute time frame. That might tell us a little bit more. And so you can see, again, it's the same idea on all time frames, right? And this is a 15-minute chart, so obviously a much shorter time frame. And so far, we've had basically a nice move up, and we've kind of been chopping around a little bit. We had this move, so we are essentially in a higher trading range than we were, just a few days ago, let's say, right? Because we made this big move up, and then since that big move up, it's kind of cooled off. And you have this period where we were going noticeably lower, and then we were in a trading range, and then this move up, and now we're in a sort of higher trading range. Let's see, what does the hourly look like on this bad boy? Right, so the hourly, so you could call this a little bull flag. The point is, it is drifting lower ever so slightly, but you can see there's like a shelf almost. I would put that here, something like that, right? So staying above around $1.15 is going to be pretty crucial. This thing has literally only started trading and they only released 12% of the supply, so a lot more supply to come out. So this thing could go significantly lower, but big value potential in the long term, a big competitor to OpenSea. And what else are we going to look at really quickly? Don't want to make this too long. We talked about optimism, right? So that's a layer 2 solution. And this thing just kind of went on a tear from 91 cents all the way to $3. Huge move. How many days did that take? Let's just, it's a good reference point. And that's a clear swing high up there. So that took 36 days. So it rallied for 36 days. It obviously had this consolidation within that, this chop zone. You had this little shallow move down. But then you had this sharp move down. So you rallied for 36 days. And then you had a move down. So you had to move down for about 10 days. Because this whole period was 46 days. And this is looking like most of crypto. It's, again, the same kind of pattern. So a 35-ish day rally and a 10-ish day decline. And now they're all starting new uptrends. This is a little bull flag. You can see this is a false breakdown in the making. Broke down below this candle, threatening to kind of break this bull flag up. So we'll see where this thing goes. This is another one where there's a lot of supply to hit the market eventually. So you have to be aware of that. That's definitely a risk. And we'll leave it at that. There's definitely tons more names that we could look through, but you'll notice the chart patterns are all very similar. It is very likely crypto as a whole has made a long-term bottom. And so that means some of these some of these smaller plays could easily 5, 6, 7, 10x in the next, in this calendar year. So going to be an interesting time for sure. We'll continue to give updates on this channel and posting on Twitter. Thanks for watching.